There we go.
What's up? I can hear you. This
What's
is
up?
amazing.
You can hear me? Did it work?
God.
Oh my God.
I was nervous. You were
Yeah,
frozen.
being a streamer is hard, man.
This is so hard.
I guess so much respect for these guys after doing this.
Can I have the YouTube open? I mean, it's like a novice question.
Yeah, you can have it open. You just want to make sure you mute it so that you don't get the double talk there. What's up, everybody? Welcome to episode 2. Good to have you with us. See Tensky in the chat. Shout out Tensky. Calcium,
Hello.
Crypto Dude, Eric Stenzel. What's up? Good to have you guys. I'm just gonna tweet out real quick, or X out, or post, or whatever we're
Dude,
doing
Steven,
here.
by the way, that's a great little audio tune you have for us. That was really cool.
Yeah, you like that?
The waiting room looks good. Good
Some
job.
lo-fi. I don't know. We could feel out the music, see what people like. I forgot to turn on my camera light here too. So let me get that up so you guys can see me.
God, the sun is gonna be like right in my face shortly. Jesus.
Oh, nice. Yeah, we got a few more kinks to work out here. We are not live in the studio today, as you guys can probably tell.
No,
We
welcome
thought
to
it would
my
be
home.
easier to do this remote, but not the case.
God, the sun is killing me. Yikes. Steven, what are you drinking today?
I am
We're,
drinking a limoncello LaCroix. I know a lot of
we've
people think these are
changed.
gross, but I like these.
We've changed.
It's 2 o'clock, man. Cut me some slack.
I got espresso.
Hold on, let me see if I can fix this light.
I don't know what I'm gonna do when the sun like.
All
goes
right,
over
am
our head.
am I more visible now?
Yeah, you look good.
All right,
Very
cool.
good.
That's what I like to hear. All right, so it is, what is it, Thursday?
Thursday.
Thursday, 2 p.m. Markets just closed. We actually just had some earnings come in.
Apple, Coinbase.
Apple, Coin, yes, for sure. What happened with Apple? I didn't see Apple. We should probably know what's going on with Apple. Have you?
Yeah. Let me.
Yeah, look it up. I
me
didn't
look it
even
up
have time to
first.
look because I was troubleshooting this video here.
This video was such a pain in the ass.
I think I saw that Coin beat earnings
Did it? I was not
expectations,
expecting
but
that.
looks like the stock is down quite a bit actually. And after hours, looks like it just
Are we back in the 70s?
crushed 5%. We're at like 80.7. Closed at
Still like that,
84.64. So a little bit of a hit there. Looks like the market just kind of front ran the beat and ended up just tanking. So curious how tomorrow goes. I sold a bunch of calls today. I already had some calls that I
At
sold.
what level?
I sold 87 for $2.
Damn.
So I don't know. Thought it was
Risky business.
thought it was good value. I don't know. Whatever, man. Looks like it worked out. Don't judge me.
You do great.
But yeah, it's been a crazy week in the markets. I mean, NASDAQ has been ripping. Where's our boy NQ?
Oh my God. Apple total revenue down from the prior year.
Really?
That's not what I
Was
expected.
that? But what was the market expecting, sir?
Well, I think they sort of like met expectations, it looks like.
Damn! Look at this nice light blue candle.
Hold on, let me get back onto your screen.
Yeah, 5% on the week for Nasdaq. I think a lot of this was driven by big announcement from Janet Yellen, actually. So I want to talk about that a little bit later. See what your thoughts are, what that means for us moving forward, because I think it's kind of a big deal. First, I want to talk about some of the moves we made this week. Did you do anything exciting?
Oh, Ziggy's in the building.
Hi, Ziggy's here. Yeah.
I guess it's not that exciting, but what I did was I went irresponsibly long this week.
Okay, we like that
Um,
on this show.
yeah, and it's been a while for me to like feel confident in really getting out there. And the names that I bought are like not that fun. I guess it's just like the simplest, easiest things. I bought um, the shit out of Google and Meta, and the idea there is just like I see a 10% dip in the share prices of both those names, and I just want to be long them. Uh, and like I think bigger picture, I see rates rising. I see sort of like this tightening idea, and I think what that does, in my opinion, it's like that just makes it much harder for sort of like startups, other competitors to come in and disrupt the incumbents. So from competitive landscape, I think higher rates actually is better for large cap tech. The winners will keep on winning.
Hmm. I like that take. Yeah, it's interesting you bought Google. I know that I had been chatting Google in my friend tech chat, I think, and then on the Magic Lines YouTube, and I've been talking about how the stock looked pretty terrible to me, actually, and I think it still kind of does from a technical perspective. We had this big supply zone here from like 125 to 145 or so that predated the crash of 2022. That's kind of like the origin of that whole move down. And then from the bottom, we traded into it, ran into a wall, and then you could see we had a pretty nasty candle last week that broke market structure pretty badly. So I was planning on shorting Google actually before this week. I was looking. I still have my little scribbles on here. I was looking for a little move, maybe back up into 130, 135 or so. For looking for a short, maybe down to 105 kind of zone. Looked interesting to me.
That would be just juicy. I'd be buying more.
Yeah, that'd be really juicy. And I gotta admit, like I'm kind of at a loss with what to do because I do see a really good case for buying everything now, given the QRA announcement that we had a couple of days ago. So I'm not sure if I trust the lines at the moment. But every time I
Yeah.
don't trust the lines, I feel like the lines always win.
Yeah.
So maybe I
Well,
will follow through with that short play anyway. Maybe this will just be like a hopium rally that ends up getting reversed, and we see Google go south from
well,
there.
hang on, because I liked your the lines you drew on just like the S&P and the Nasdaq, but on those charts, like look, I don't know how to read charts, but when you were drawing those out, it kind of looked like for a couple little zones where you were thinking like, well, it's probably going to go here, could even go lower to this next zone, um, and I felt like there was a reasonable probability that we went into that first zone. I don't know what you call it, demand zone or something. We went into that first one, and then maybe we just bounce off that.
Yeah, I really like to look at the area responsible for the move that kind of broke structure because that's like a reversal in the character of the market. And on ES, I had always drawn out this kind of zone right here from maybe 4065 to 4200 or so. And I've had my eye on this area for a while as a potential area of reversal. And you can see this week, I mean, we got a big candle off that area. I don't know if that necessarily means we're just going to V reverse and go straight up from here. Possible. I mean, that's what happened. That's what happened during COVID, right? Like we we V bottomed and there were no retests given, right? This structure just went straight up, and then the best you got was some little tiny wick, and then it was just up only. I don't think that what happened this week is any sort of a catalyst like like COVID. So I kind of think it could be interesting to get back in lower. I do think that we're trading up into a zone that's probably going to be tough to push through on the first try. So this zone here from 4350 to 4430 or so. This is the sort of area of supply that's responsible for this leg down, which broke structure here, right? So until this area is flipped, from a technical perspective, from a price action perspective, this is still bearish. This is still just sort of like a retracement leg until proven otherwise. But we could have something like this that I've mapped out where we kind of come off this area and bottom back down into the 42 range, 41.50 or so, put in a higher low, then go higher, and then that's probably game on at that point. Before this week, I was really thinking there was a good chance that we kind of took all this liquidity here in that 4050 to 4200 demand zone I was talking about, because it's nested within this larger zone here. Like we had this very big, this is kind of like a monthly area, right, from 4200 down to 3800 or so. That was the big leg down before we got the really big leg up that took us all the way up to 46. So this entire area to me is also a potential reversal area, and this is the area we want to hold, like if we want the long-term bullish structure to hold, because if we lose these lows here around like 38.30 or so, that's really bad. That's really bad in my opinion.
Okay,
and
so
that puts the low from last year at 3,500 back in play.
So you're sort of muting my exuberance, which I like, but this still looks pretty bullish to me. Like I think there is a possibility we take out some of those lows before we launch, but this does feel kind of like launchy to me still.
Yeah, S&P looks good, to be honest. Not in the super short run, but like I think the area we just went to, there's a good chance that was a bottom, right? So it's interesting for me looking at the chart of the index, but then again coming to like one of these big names like Google. Like Google looks very bad compared to the S&P, right? Because the S&P has sort of already retraced to down here on the Google chart. Apologies if you can't see this, right? But Google's up, basically where the S&P topped a while ago. So it's kind of, it's almost like it's like a month or two behind, right? Like a couple months behind the S&P chart when you look at it. So like I don't know if the relative value is there in that specific name versus like just buying the index or something.
Well, it's funny you mentioned that, because that's like sort of exactly what I was thinking. Because the S&P is trading at like 20 times earnings, so that's like a 5% earnings yield in an environment where you can earn even more on short-term treasury bills risk free. You can get 5.5 on a T-bill. So I'm kind of thinking, well, fuck, that doesn't sound like that good of value broadly. But then you see like these individual names like Google trading like at 18 times forward, and that to me is compelling, because this is a growing company that it just reported double-digit top-line revenue growth and like 40% earnings growth. So it looks like kind of A, cheaper than the index, and B, growthier. So
you think Google looks good from a numbers, from a value perspective?
Yeah. I mean, yeah. Compared to the broad index, I mean, yeah, I would rather own Google.
That's really interesting. So I'm curious to see where this plays out over the next month or two. Like who's right, you or the lines?
Well, I hope your index lines are correct, where you have a little pullback and then a launch.
Yeah, I'm trying to figure out how the index lines could play out, but the Google chart could also play out at the same time. It doesn't sound like something that should be able to happen. It doesn't quite make sense. It's hard to see. I mean, I guess I could see it happening if like this was sort of like a bit of a fake out move up, and this leg takes us all the way back down into here, sub 4K, and we chop around here for a bit and then go up. Like something like this could give an opportunity, I guess, for Google to, stocks like Google to nuke kind of hard. But another interesting thing is that, like, as we were talking with Rizzy in the Discord today, alfalfapod.com, if you guys want to come hang out in the Discord and chat, and he was mentioning that a lot of these like super trash tech names that have, the ones that are down like 95%, have been like rallying super hard. I haven't looked at Shop yet, actually, but he was saying Shop. Oh my goodness. So Shopify, holy, holy mother of God. I didn't even notice this.
I'm delayed on the charts, so I can't even respond. I can't react yet.
Okay, well, Shopify looks hilarious. I mean, this thing is Shopify's up 32% in the last 2 days.
Wow.
It okay. Gapped up like it gapped up today massively. I mean, this is wow.
And what it like? So is this just a
18%
lower
gap
high
at the open?
Again, like a lower high with like that's going to fill in that big fair value gap below it? I mean, is that?
I don't know. I have never looked at this chart. It doesn't look very good. Yeah, I mean, this is the type of, if this is like an altcoin, you see these types of charts, right? And the coin goes, woo, and everybody's like, yeah, we're so back, new all-time highs, and it just...
And then so you see me squirming over here as I'm trying to get my face out of the sun. I'm trying to get my mustache out of the sun.
Oh, man, yeah, you are. You don't have any curtains there or anything?
No, this is like right on. Oh. I missed the studio already.
Okay. So, yeah, I don't know if I'm buying. I don't know if I'm buying this chart. When you zoom way out, it looks very, very bad. When you zoom in, looks a little more palatable, I guess. But that's a gross monthly. That's a gross monthly, and this thing is still down. What is Shopify down? Shopify is still down 66% from all-time highs, 87% at one point. Yeah, it's crazy to see how wrecked some of this stuff got.
What about you? Did you make any moves this week? Any fun moves?
Yeah, I finally bought my first batch of Riot calls.
Let's go.
Yeah.
Congrats on the pump, sir.
Thank you. This is one of those. I don't want to say I bottom ticked it because tomorrow it's gonna just go to new. Just go pull up my entry. But I got in pretty good yesterday. I think I bought at like 969. Nice. Nice. Where was that? Here, Wednesday. Yeah. Okay. So I got in here. Whoop. Yeah. Last I checked, I was up 40% in one day. So that's pretty good.
40% on a day.
The magic of options. Yeah, I bought March $15 calls. Okay. And I bought them for $1 or $1.10.
Sounds cheap.
Yeah, I really liked the risk reward on this. I mean, I know we've said this before, but God, we're at $21. Yeah, $21 almost. Just this summer, just a couple months ago.
And that was when the price of Bitcoin was way lower, right?
Yeah, but the price of Bitcoin was like 26K, and this thing was at $20. And now Bitcoin's at 35, and I don't know. I'm hoping there's a bit of a catch-up trade here at least. But yeah, prior all-time high is about $80. So. Yeah,
well, we originally mentioned this trade on the Alfalfa pod like a week or so ago, and I joined you on here, and I'm long the Mara and the Riot.
Yeah, I mean, I've been talking about this trade in my friend tech chat for over a month, I think, because I was thinking, okay, if we go kind of either full bull or like just mega pump up into the ETF. I thought like miners can move like really, 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 really hard. They have that like nice convexity to Bitcoin price, and in reality, like I'm really happy if this just trades kind of into this monthly supply zone from like $24 to $46 or so. If I can get the mid range of this at $35, I mean that's basically like a 13x on the options, maybe a 20x depending on how fast it gets there. So I'd be super happy with that. Yeah, I only bought 30% because I always do this thing where I want to all in, and I'm like, no, this is the entry, and then I all in, and the next day it goes down, and the week after that it goes down more, and I just feel like a moron.
Dude,
So I told
totally.
myself I was going to DCA this position, and of course it just insta moons.
We'll probably get another chance tomorrow.
Yeah, maybe. I mean, the reason I bought here was because of this little weekly order block right there. So about $8.75 to $10 on the chart. This is from back in April. This is an interesting zone to me. This is the zone that shifted market structure to the upside. Again, I like to trade from these zones that kind of give these big candles that, you know, break structure, because it tells you that there's large buyers in here who are moving the market, right? And there's a good chance that they will fill more orders down there, or they'll protect the price they got into.
I like that thesis.
Yeah, and I think in reality, like, this move is probably at least trying to take this high here at like $23. So I think that since we didn't take that high yet, I think we're just going to refuel here and go back up for. I think there's a good chance that area is protected. So given the context that I want to get in on that area, you know, I was kind of zooming in on the daily and even the 12-hour chart. And I saw, you know, it looked like a little bit of accumulation there, and then we had market structure shift to the upside. And so I basically was like, okay, this is my cue, and I'm going to get in here on this retrace once I see something kind of bullish happening on an even lower time frame, the 15-minute. So I was kind of down here on the 15-minute chart on Riot on Wednesday or whatever, and then saw that shift there.
So,
and then got
you know,
in,
on Alfalfa,
we've
talked about Coinbase leap calls. We've talked about these miners buying calls. Like, which one do you feel more confident in, I guess? Or you don't really own any Coinbase calls, do you?
No. I bought a bunch of spot, and I've done quite well, like, selling covered calls against that position. Been kind of just strategically selling covered calls whenever we're near that range high that we've been at. And like let me pull up the coin chart here. Like, coin's been stuck. We talked on I can't remember if it was on this pod, but I've definitely talked on Magic Lines about how there is this yearly mid-range at like $73. That's kind of like it's just like a chop zone. You're at like a yearly equilibrium, so price is going to be kind of sticky and choppy there in that zone. And it looks like we've formed a range like above that yearly mid range, which is interesting, because we've basically been ranging between like $86 or so and $69. So curious to see if price is going to. I would love to see. I would still love to see a fake out down below into. We've got some like really good monthly demand from $66 to $46 that I've been looking at forever. This is kind of where my entry was, and where I'd be happy to load up more. So I would love that kind of fake out move into that range, and then a strong move back into the range and up. That would be like a really strong buy signal for me. In here, I don't know. I'm not doing much.
I've been waiting for that 60 handle for so long, and I just don't think it's coming, dude.
It might not. I mean, it is kind of hard, like, from a non chart perspective, to think like why should this stock tank now when we're so close to the finish line on an ETF, and they're going to be the custodian, and all these bullish catalysts are happening for crypto in general. So it doesn't like intellectually make sense to me. This is definitely one of those situations where like there's not like a really good strong confluence between like what I think fundamentally and what the chart says. So yeah, not looking to make any moves here other than playing the range and selling calls. And like I basically sold some calls up here, sold some up here, and then I sold some again today up here. Actually, like this morning, I got like $2 for like an $87 call when price was $83. So that expired tomorrow. So I took a few nibbles at that.
I love this game. The like 1 or 2 day expirations. I love that game.
Yeah, I mean for the long term, for the long term accumulators of this thing, I don't know. Like you definitely can squint and see like a support area here that we're just simply consolidating above. I think it's a totally reasonable perspective. I could draw a line there if I wanted to around $77 and be like, oh yeah, it's top of the range. We're gonna go up from here. So I don't hate buying around here or DCAing, and I think you have to DCA in a range like this because you're gonna probably get chopped up. But like I really want to buy more, like I said, in that kind of $46 to $65 range or so. I think that's.
I'll tell you what though, like when we're talking about Coinbase and the miners and stuff, like I do still hold quite a bit of spot coins, but I'm not buying more of those, and like I feel pretty good using these options to give me like the convexity upside. Like if this move in Bitcoin happens or when it happens, like I feel like this is kind of a better play.
Yeah, I mean, I love Coin. It's no secret that I love Coin. One of the most underappreciated companies in the world, in a sector that nobody currently wants to touch, that suddenly everybody is going to want to touch. I think it's great, and I've said before, if I had less money on chain and more money in my brokerage account, I would probably own like way more Coin than I actually do, just because I think it's such a great play, and I like having money in a brokerage account as opposed to like sitting like in Lido or something on chain. It just doesn't make me super comfortable, but it is what it is. All right, let's talk a little bit about some of the big movers this week.
Yeah, there were some big movers.
Some big
in
moves this
world.
week. Yeah, I think the move on everybody's mind is Solana.
Fucking Solana.
Solana has just absolutely crushed. Do I have that up here? Of course I don't. Of course I don't. That would be way too
If you remember,
organized.
my wife used to call herself the Soul Sister.
She did call herself the Soul Sister. She should have, and she abandoned it when they needed her most.
She only holds JPEGs on Solana now.
Yeah, Solana monthly chart is still a travesty, for sure. I mean, as far as I'm concerned, still bearish on the monthly until we get a close above 48.23. So that is going to be a real interesting time. If you go to the weekly chart, though, things are already looking pretty sweet. Like I think this move on the weekly we made this week, where we took out the high at $38, is a pretty big thing for me, because we had
you own some Solana, right? Because
yeah, a very tiny amount. I used to own more.
I
bought it. I bought it like in January. Where was that? I caught like this move here at like $12, and then I rode it to like $20, and then just got out of the trade.
I mean, that seems like a pretty good.
I bought a little bit more this summer at like $17, but like nothing really. I own basically nothing because I got a little too cute with it, I think. But also I just own so much Ethereum and Bitcoin, like as a percentage of my net worth, that I don't feel compelled to gamble on like alts as much, because I already have so much risk. If I only had like 5% of my net worth in crypto, like I would have like a huge Solana bag, because it's
so
less
what about this
painful to
like
lose it.
this overhang of like FTX supply that they're gonna have to liquidate? Like, doesn't that sort of sell pressure kind of like give you pause pause? Like, feel like this has to come
Not
back down?
really. It's like I was talking about that in August. Like I don't know if you remember, but back in August, like everybody and their mother was kind of talking about, maybe that was September. Yeah, it was that was kind of like mid-September. I think right around here on the chart or so, like everybody and their mother was like, "Oh my God, FTX, like FTX, they're gonna dump all this." And like when I'm on Twitter and everybody's talking about how the coins are gonna dump because supply and blah 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 blah, like it's priced in, like in my opinion. And then what that also means is that like the positioning is probably really really skewed, and you get a bunch of people who are shorting this move down, and then in like early October it just goes whoop and just liquidates everybody, and then
Beach ball underwater.
all of those shorts, all of the people shorting the overhang, right? They were all just the fuel for this like huge move up that we had, and they got wrecked. Got
I want to
wrecked
short
so
this
hard.
thing now.
Yeah.
I'm not going to, but I want to.
Well, I'm not keen to buy anything right here. I mean, for one thing, be interesting to see where we close the week. Like we really don't want to see a close below 38.8 on the weekly. It's going to give you like a really nasty swing fail candle. You really want to hold above that level. I don't think we're just going to come straight for $48 because this entire zone here, from like 25 to 48, right, all the way from last summer, that's also just like an enormous supply area. So you kind of got like supply nested within supply. It's a lot of headwinds. So like if rip to the people who bought at $46 yesterday, a good chance it doesn't come back there for a bit. Probabilistically speaking, I'm not shorting this. I learned a long time ago you don't short these like nice runners in crypto. It's just like a good way to get
It's a
annihilated.
freaking freight
like,
train.
this isn't the setup for it. Like you could see a setup where we kind of break out above 48 and go into 50s, and everybody's like, yeah, we're going higher, and then it kind of does one of these and back inside, and like that could be a short setup, I think, but not something I'm keen to take here. I'm just more using this chart as like an example of I shouldn't be hopping on the trend. Like, see, you miss the trend, you miss the move, you just kind of, you gotta dust your hands off and move on to the next coin. There's always another move, and you get wrecked kind of chasing these. This was like a super obvious move in retrospect. You had a great setup for it, and we had these two equal highs around like 38.9, just like a perfect little liquidity magnet from the bottom there, and we hit that really really quickly. What's really
just pinned right now though?
What's that?
Everything's mooning, and ETH is just pinned at 1800. Why?
Yeah, well, ETH has been where Solana is now. Like a lot of these coins, they have these like supply overhang zones, right? And Bitcoin is similar thing, right? Like if we pull up a Bitcoin chart, Bitcoin also had this huge move, right, in 2022 from like 33K to 48K, right? Like that whole move up on a monthly time frame is like that's like monthly supply. So getting into this is going to be tricky. It's not surprising that we're running into some resistance here coming into it. And then on ETH you have like a even worse situation than Bitcoin. God, these charts are like ETH is battling this weekly supply zone here from the summer still. Like this is the August supply zone that gave us that really nasty candle in mid-August that we went from 1880 all the way down to 1540 in a span of like days. It was a really nasty move. So clearing that is going to be hard. But when we do it, I think it's going to be like a really, really, really biblical move, because when you get into a long position, one of the things you're looking for is you're looking to the left on the chart. And when price makes, let me see if I can pull up my path here. So when price makes these sorts of moves, right, higher lows, like every time it does this, you've got like a sort of zone that's left behind, and a zone that's left behind, and a zone that's left behind. Like each of these zones is like a place where price failed to push higher, and then you get a break to the downside, and you'll see like larger players there sitting with offers. What you normally see, as you do here, is like you see like a leg up, comes back into the zone, retests that supply, and then moves down, move back up, retest it, and move down, right? When you have a move that's like that versus a move that looks like this, and again, apologies to the people listening if you don't have video, you sometimes have moves like this where you just get these very fast moves, and price never has a chance to come back up and like test this zone here, or this zone here, or this zone here, right? This is a concept called mitigation, right? So when you have areas that are not mitigated, when you're coming back up, what tends to happen is price will get into this zone, and then you'll get a strong reaction out of it, right? And then a strong reaction out of it, because you're kind of retesting that supply. A crypto dude asked in the chat, what does supply mean in this context? Significant sell orders to fill. Yeah, it's just a zone where the price action is sort of established, that there are large people filling sell orders, and presumably they have more orders to fill if price moves away from that zone before they're able to get all those sells in. But in the scenario on the left, when you already have price coming back to these zones on the way down, when you get the move back up, sometimes you can go straight through everything. Like you get these big moves because all of these areas have already been retested and mitigated on the move down, right? So a good example of this, in my opinion, is the ETH chart from the summer the summer downswing we had. I mean, if you look really carefully at the price action from this period, you basically have the higher high, the manipulation leg at 2029 or so. We ran the May high, and then that was it, right? We dumped. So we've never come back here to test that. But like all of these, look at all these like highs that we put in. All of these lower highs on the way down, lower high, lower high, lower high, lower high, lower high, lower high. Like if you shorted ETH from the beginning of the summer on down, like you've just had the freest of rides. Like look at this, like all the way down. Like where's the first high that even got taken here? I mean, yeah, so basically, so this one got taken, this one. Okay, so all of these highs have never been touched, right? This is all liquidity. And you can also see that, like, we had these zones that gave moves, right? Like this zone here, but price came up here and tapped it. And we had this zone here, but price came up here and tapped it. We have this zone here, price taps it here and here again, right? So all these zones have been mitigated to an extent. And then you have all of these highs just chilling here, just waiting to be taken, right?
To be
This to me is like, this is like a forest that's just like full of dry wood, and it's just like waiting for a little spark. Because realistically speaking, like there is absolutely nothing on the frickin' ETH chart until you get to I'm gonna pull up the 12-hour here so it's a little clearer.
And what level is that? That's like the 1900.
I mean, this imbalance that we created, right, from 1985 to 1945, right? And when I have this, I often just like look at the mid-range of it. So the middle of this is probably about 1965, right? And then you also have an imbalance on the other side. This is basically like a balanced price range, a BPR. So, you know, when you get a scenario like this where like an imbalance up and then an imbalance down and it hasn't been tapped yet, tends to be like pretty strong resistance initially. You're probably going to get a reaction off of that. But like that's a pretty big move, right? So I'm thinking if we get through this supply zone, I mean, we could just rip very, very quickly through all of this. This could be a very, very nasty move if we get it. I mean, that would be almost 10% move. Like this could happen in a day for sure. The question is like, what are we doing right now? We're consolidating below supply. Still looks bullish to me. Like I saw like you had like this SFP here on the 12-hour, right? And then that was followed by you had a break a structure to the upside here that basically came from this zone here, and then you can see price just tapping into that zone, but then we also had this zone here from 1775 to 1793, and that zone gave you like a really nice impulse up on Monday, right? So this is something I'm looking at very, very keenly, and you can see price is just it is reacting quite hard off of here. Now you can't tap a zone forever, or it does collapse through. But I think this is like a pretty interesting place to potentially get a reversal. So I'm watching this pretty keenly right now. We did have a nice little structure break on the 15. So you're hoping that you kind of consolidate here, back up, and then make a run.
I want to get irresponsibly long in that zone.
Yeah. Not really an area I like to trade from, to be honest. Like I just don't like getting long. You're getting long at resistance, right? And we could definitely make like a big move down and like wipe all of these lows below the zone we're consolidating at. And another good case for that is that if you get off the 1 hour chart and zoom out a little bit, kind of like a weekly breaker here from 1520 to 1740 or so, but this area, this zone hasn't been tested at all yet. So it would surprise me 0% if we come in and tap into this, a little bit and then go up. So that's another possible scenario I'm looking at. But yeah, I think ETH is not a great thing to trade on the lower time frame right now. I still think it's like a great thing on a higher time frame. I don't know. I tweeted this summer that I think in retrospect, when we look back, we're basically just going to see this whole thing here, from 1640 to 2000 or so is just sort of like a giant accumulation range. We manipulated above the range, manipulated below the range, and then ultimately a manipulation below the range, and then back up. And I think there's a really good chance that we go back into the 2000s, and then when you zoom out, you look back at that and you're like, oh, that was the That was the
top of the line.
reaccumulation before, the big
So
move.
you might not want to be buying ETH right now. I think that sounds reasonable. Is there anything else that you'd want to buy? Like, what about anything in Stockland?
Well,
You anything caught your eye?
before we do that, I want to just point out one thing I'm watching on ETH that I think is really important, and that's the Sol ETH chart. Because I don't think ETH's going to run while Sol is like ripping. I think we want Bitcoin to cool off, and we want like Solana to cool off as well. I was telling people on Twitter like I wouldn't be buying Sol at these prices, and that was partially because of the USD chart, but also partially because of the ETH chart. Like you have a very, very clear weekly bearish structure here, right? And the protected high is up here at 0.026 on the Sol ETH ratio. So until we clear that, and that's a pretty big level, like Sol ETH isn't really just going to go up only, right? This is actually still kind of a bearish chart if you zoom out. I do think Solana is going to probably outperform ETH over the next bull run. But you can still eat it pretty hard. Like if you're that guy who takes all of his ETH and then you rotate it here, like that could be a 40% hit if it just drops back into the reaccumulation range, and then you feel like a freaking moron because you rotated before Ethereum, which is usually just like such a bullish time for ETH. So I think this is looking good for ETH on the Sol ETH pair. The ETH BTC pair still looks ugly, and I'm still hedged on that. But yeah, this is still pretty down only, and we're all clinging here, hoping that this little accumulation before the merge saves us once again. But as I've said before, until you see some sort of bullish market structure shift on this, right? And this is 0.055 roughly, 0.0556 if you want to be exact. You really want to see some accumulation and then a break above that, and then kind of get long here, and that's your ideal scenario. And then the ETH BTC chart looks very similar. It's a similar setup to what we were looking at on the ETH USD chart before as well, where you have all of these lower highs all the way down that were just totally never tested, right? Yeah, crypto dude, the Hoffman. I need that. I have a chart saved where Hoffy was taunting me like, what was it? No, it was 2023. It was here, right here. He's taunting me in the Discord. I still have the receipts. The fake triangle breakout, the meme triangle down only. I remember. I remember. But yeah, if you look at this chart, there's just lower highs the whole way down, equal highs there. Like this is such a magnet of a target at 0.07. But lower highs, like none of this has been tested. So again, like I think when this thing rips, it can just really rip, like melt faces kind of rip.
Yeah, Hoffman's going to get the last laugh ultimately, but I think this is going to get uglier in the interim.
I sure hope so. Okay, yeah, let's pivot back to TradFi, because I want to go back to the reason why stocks moon so hard, and also why our favorite boring asset TLT mooned pretty hard this week. TLT is basically the iShares 20 plus year treasury bond ETF. It's what you buy to get exposure to long bonds, and it's what you've absolutely gotten annihilated by like over the last I don't know if we mentioned this last time, but I cannot get over how funny it is that bonds are down more than Bitcoin.
Yeah,
we were down 55% from the highs last week. That is so wild.
The 60-40ers.
Yeah, I mean,
wrecked.
Yeah, if you zoom way out, it's a pretty flat line, huh? It's like an origin of the move down here, and then there we are.
So do you want to talk about the QRA?
Yeah,
That
let's talk about the
Yellen just.
QRA, what that
So
means.
I don't even know what the acronym stands for. Do you?
Quarterly refunding announcement.
Okay, so the QRA, as I understand it, it's an initiative just put forth by the Treasury where they're just willing to buy back long bonds. They're going to buy back sort of like the long end of the curve and issue new treasuries like with shorter maturities so that the net liquidity doesn't actually change, but it does sort of inject bullishness because you're like removing duration risk from the market.
Mm-hmm. Yeah, so the Treasury basically changed supply expectations of like long versus short duration relative to what the market was expecting, and they basically like reprioritize, as you said, in favor of like these short duration bills versus the longer duration, like the 30-year and the 10-year, right? And yields were getting annihilated coming into this. I think this is like a huge policy decision because it's basically like the Treasury tipping to the market, saying like, hey, when things get really really hard, we're gonna back off, because of the market sort of like afraid that the Fed and the Treasury and all the big players involved, they're just gonna just fight inflation at the cost of everything, right? And when those yields started ripping, that was really really painful for like Nasdaq and stocks. Like that was pretty well correlated with like the top of stocks over the summer, and then we saw like huge moves up in the 10-year. But now this is like totally reversed, and that's going to be like a bullish tailwind for risk assets like stocks, especially in the short run. And I think in the long run, it's sort of bad for inflation because you're basically saying like we don't want to go through the pain now that would be involved to make sure inflation stays low. Instead, we're just gonna, this is like similar, I feel like, to the taper tantrum, back in 2018 or whenever that was, where the market was down and then the Fed kind of just took their foot off the hawkish gas, and then we reversed super hard, and that just kicked off like an insane little bull move there. So yeah, the market's definitely picked up on that. Stocks definitely seem to
I'm
have
pretty
picked up on
bullish
that.
based on this. I mean, this feels like kind of like yield curve control in a way. The long bond isn't going to go up to fucking 9% anytime soon. This just feels bullish.
I mean, you're not alone. I mean, Andy Constant like saw this happen, and he was like just insta bull, and he's been a bit of a stonk bear for a while at this point. So it was interesting to see him flip pretty hard, trying to find
and
his.
To your point on the
long
long term stuff, I agree with you. Like this actually just kicks the can down the road. And I was listening to this roundtable with Jamie Dimon and Larry Fink and the head of the Saudi investment fund, like just a bunch of heavy hitters. Your boy Ray Dalio was there, and they were all basically saying the same thing. Like they see like a hard landing coming at some point, and they're all like so uncertain and nervous. And I agree, but like not yet, not for now.
Yeah, I feel like this kind of increases odds of melt up, and then also increases like the eventual catastrophe after that happens. Like instead of us having just like a sustained period of depression and like some real pain, more pain in the bond market and in risk, like now we're kicking that can. So it's like a similar dynamic to what's happened for the last 15 years. We kick a can, we get a mega move up as a result of that can kicking. The ghosts come back to haunt us. We kick the can again. People are like, there's no way you can kick the can again. But then the market goes up again. I don't know. Like I feel like as an investor at this point, I know we're all trained to just buy the dip, and then people are like, oh, you can't keep doing that. I think you just keep assuming this is going to happen until it doesn't. And And I saw this, and when I saw Andy tweeting, like, I mean, he sounds like he's on the show, right? Let's go.
Buy all
QRA
assets.
synthesis. Buy all assets. Janet saved Christmas. Let's go.
Love it.
Yeah, that was like the final. That was like the final straw that broke the camel's back for me, where I was just like, "Fuck it, I'm buying those calls."
So what else? What else you like in, I guess, in TradFi besides just more coin based?
I'm just gonna look for an entry on the Nasdaq. I know that's kind of boring. I don't feel like I have the mental headspace to like stock pick at the moment, and I think Qs go up is going to be like a pretty easy trade. So I'm just kind of looking for an entry there.
Can I talk about one? Can I talk about one that I like? So I guess I like the calls with with Qs. I still like Google, Facebook, etc. But I'm always looking to get like exposure to like really growthy themes.
Mm-hmm.
So like AI is one of them. Crypto is one of them. Maybe this like XR metaverse play ultimately becomes one of them. But one thing that I don't have exposure to that I want to get exposure to is like the Ozempic move. Like that this health craze.
Yes, I love it.
I think Alfalfa did an episode on Ozempic, but it was more talking about sort of like, do you believe?
Yeah, it was philosophical. It wasn't like
the health benefits of this, or like the net positive.
Which
net
is sad.
negative.
We should have just told everybody to long their face off.
Yeah, because there is a company that makes Ozempic, Novo Nordisk, ticker symbol NVO, that I think has gone up 100% since we did the episode.
Let me pull that up for you. And
Thank
for
you,
the
sir.
stream here. There we go. Let me just boom. All right. It's on the screen. It is beautiful. This is one of the best charts I've ever seen.
So, I mean, I was talking to you about this. Fuck, man, it's up again today. So I've been waiting for an entry.
Oh my god, it's
so
up only since 2000 and it's what is this company?
How the fuck do I get into this?
I need to bust out the log chart. It's too up only. This is the best stock I've ever seen.
So hold on.
Oh my god.
So why is it showing on yours like 700? Because
what do you have? I mean, there's a few of these. I pulled up the Novo B.
Okay, I'm looking at the ADR, which is just ticker symbol NVO. It's traded on like the New York Stock Exchange.
I pulled up the 4-in-1. It looks it looks about the same.
Yeah.
We can see that we actually had this horrible time here in the 80s on this chart. So, rip to you. Oh my god, this thing was 11 cents.
Jesus.
11 cents to $101. That's pretty good.
So when you look at something like this, like from a chart perspective, like I know the fundamentals of this. Like the fundamentals to me are people are fat and they want a magic solution. So they'll like basically pay anything. And right now they are literally paying. This is like $1,000 to $1,300 a month to acquire, and the supply is like really limited. So like people who need it, for like diabetes and stuff, can't really even get it because everybody just wants it for weight management. So like I know that there's like an insatiable demand that's not currently being met. So I want to be participating in the economics of this, but when I see a chart, I'm like, how the fuck do I buy? Like when do you enter a chart like this? Is it now?
A chart like this, you just go all in immediately and walk away. This thing is ridiculous. Oh my god. No, in all seriousness, like if you want to be a little more nuanced, I mean, this is just a clean bull trend, right? Like all of your lows are sort of respected. You get these pullbacks and then you just keep going up. One of the hard things about really strong bull moves, and you can see this here, like there's two kind of areas, right? You've got this you got this zone here from like 75 to 85 or so. So basically last year we had this consolidation before a really nice candle up, right? So this is an area of demand, and buying in that area of demand on a pullback should be pretty safe. Like, people are wanting to buy there, right? The problem you get with like really, really, really strong moves is that often the pullbacks don't make it into those demand zones.
Yeah, that would
And
just
then,
be too easy, too clean.
yeah, so what I've noticed is that like, this is, I don't know if you want to call this a fair value gap. You want to call this like some people call this a busy. I think these longer ones are technically busy, buy side imbalance, sell side inefficiency. It's basically an area of the market where only one side of the offer, the order book, was offered or bid, right? In this case, like, just straight through, like, this is just like excess buy demand here, right? Just a complete imbalance of like buyers and sellers in the market, and your chance to get into this move wasn't in the demand zone. It was a test of the gap. It was a test of the busy, as you can see on this wick here. That's basically all you got. Maybe we go back into it, maybe we don't. But that wasn't even like the 50% of that zone. Sometimes the moves are really strong. So this is a fib that has a 30, 50, and 70. Like, sometimes when you have these really, really, really strong moves, you're going to tap like the 70 or the 30 and then go. You're not even going to get to the 50. So I often use like the 30 or the 70 for entries. So yeah, you could have just limit order at the 30 of this gap and then whoop. In reality, this is like I want to buy this stock immediately because this is unbelievable.
Yeah, I think so getting exposure is almost like a mandatory in my opinion. And then like, how do you execute? I think one way to do it that's kind of simple is like selling out of the money puts. If it goes down there, then you just get exercised at a cheaper price. You wanted to own it anyways. But then you miss the tremendous upside because you're not just buying it outright. You could buy long calls, and then if the stock continues to do what it's doing, that also sounds pretty good.
So it looks like we have a new demand zone here. Like, when you're in these bullish trends, these zones should be respected and not broken. So initially, this was the low that shouldn't be broken. This is your demand zone, order block, whatever you want to call it, right? Last week, we closed the weekly above this 100.9 high. So now, to me, that means that this is the new low that we shouldn't be going below. Like, if we go below this low, things get dicey, right? And then this zone here is basically like your new demand zone. So you're looking for price to kind of retrace into here, and it could come back down here like this, and then you get a bullish flip to the upside, right, where price starts making higher highs on the lower time frame, and that's generally your cue to start kind of averaging in, and then up you go. So that's like a fancy way of entering. And again, like, you can kind of use these kind of 30, 50, 70 zones. You can see we initially bounced basically off the 50 of that zone, but kind of failed to put in a new high. So I think good chance this kind of retraces back, possibly into the low 90s again. It's pretty big pullback.
Low 90s, I would long the calls. I would sell the puts to finance more long calls and just fucking go ham. Here's some more about this drug. Like, for instance, this is not covered by insurance, so people are paying out of pocket currently, and they're willing to pay, over $1,000 a month. So right now, their customer base is like in the 100,000 range. But if this thing is this like panacea that it seems to be, then like we're going to have 1 billion users, or more.
It's amazing.
And I don't actually know how the economics get affected if like once it gets like approved by insurance companies, because like what you have to do first is you have to prove that there is some medical benefit outside of just like obesity. Like you want to prove like, oh, this actually helps for like heart disease or liver disease, and the early indications are like overwhelmingly positive on both of those. So I really think you can just like expand customer base like enormously.
I love it. I mean, the fact that I can long a chart that looks like this and simultaneously go long Americans being fat and lazy, like that's the trifecta right there. I mean, I don't even know how you can lose on that trade.
Show me the incentives. The outcome is obvious.
And I mean, and like not to be like morbid, but like the population is getting older and older and older and fatter and fatter and fatter and having worse and worse and worse health outcomes, and more motivated to use this, not less. So I definitely see the tailwinds there, and obviously the market sees that too. We're not the only people looking at this being like, oh wow, we should go long the stock. Everybody's going long the stock right now, clearly, but like this is just like a trend that you don't fight. I think you buy a little bag and you just kind of keep DCAing it until it shows you that it wants to change direction, which it doesn't look like. It hasn't wanted to go anywhere but up for years.
The market cap of this is huge. It's like 350 billion already. So we're not early.
No, we're not early. 350 billion. That's huge.
It's huge. And then there's like a competitor that Eli Lilly is like another monster cap drug company that they make a competing drug called Mounjaro.
This thing's up only 2.
Yeah, LLY.
Oh my God! Why are we buying crypto?
Yeah, exactly.
What are we doing? Oh my God, we're damn fools. Look at that. Good God, man. That's incredible. What a trend. Jeez, like, I can't believe people are buying, what is it? I guess Tesla looks pretty good too if you zoom way out. Forgot I still have the log chart up. Yeah, why would you long this? Why long that when you can long this? What are you doing, Tesla bulls? Bullish diabetes. Doesn't Eli Lilly make insulin?
Yes. Yeah, they were the first company ever to do that, I think.
God, so they got insulin and the Ozempic competitor. God.
Yeah, and Novo makes insulin type stuff too.
That's crazy. I mean, this isn't exactly what you want to see on the monthly. This is like a monthly swing fail in the making. So that gives me a little bit of pause.
Might get our chance.
Yeah, I mean, still looks pretty good on the weekly, but I would be watching how the monthly plays out, I think, because that could be gross. Calcium's dropping some alpha in the chat for us. For NVO, late-stage trial data in August showed that Wegovy reduced the risk of major cardiovascular events such as heart attack or strokes by 20% compared with the placebo. Is this the trial that they stopped early because the results were too good?
Yeah, they were like, yeah, exactly. They just said, yeah, we get it. It works. They just quit the trial.
These results are unbelievable. They're too good. We can't even keep doing them. They're so good. They told them, please stop doing the trial.
So Wegovy is their other product that is like, it's basically the same active ingredient or whatever as Ozempic. They both do the same thing.
All right. Well, I'm sold, man.
Yeah.
Eli Lilly and Novo Novo Nordisk. That's a good pick. I like it. Thank you for that.
Cool.
All right, we're an hour 15 in.
Yeah.
We didn't quite get through the agenda.
There's a lot we didn't touch
A
on, but I think
lot
that's
we
good.
didn't touch on. I know we wanted to talk about corporate bonds a little bit. Very sexy topic. Not really, but yeah, Howard Marks of Oaktree has been very bullish corporate bonds, and I don't know if he's changing his tune now after the QRA debacle this week. Maybe that has shifted the risk reward a little bit, but he's been kind of pounding the table for at least a few weeks, maybe a couple months, that the risk reward on certain segments of corporate debt is really, 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 really good as compared to the traditional stonk market. So I was curious for your take on that. Do you think he's right, and how do people get exposure to this if it's something they want to do?
Yeah. So, I actually think the QRA probably helps corporate bonds, but there was like a lot I wanted to show, but we couldn't get the screen share to work.
That's right.
In our test run.
Technical issues.
So I don't really want to.
We were able to get the screen to share, but you couldn't talk.
Yeah, there was no audio when the screen was showing. So, maybe I can hit it more in depth later on. It's like, how do you buy them? How do I look at them? Like, what do I sort of look at when I'm looking at a corporate bond? I think there are opportunities. Particularly like further out on the risk curve. Like if you buy like Apple corporate debt, like you're going to get
no yield on that, I assume. Yeah.
Yeah. So I think you have to kind of go further out, and that's like sort of going into like non-investment grade. And I'm like a picker, I like to find like unique opportunities, and that's where you find them.
Yeah.
And in there's a lot of companies that like we know and sort of like we understand the business model and it seems safe, even though they're called like junk bonds. But we can get into that another time when I can actually like show you.
All right, cool. Sounds good. Yeah, I know these things they're confusing to me. You got the ratings, you got your AAA and your BBBB and your junk and your yields to maturity and all these fancy things. I can't draw on a chart, so I don't own any. But yeah, let's put a pin in it for next time then, or whenever we can get the visuals better, because I think you got a lot of nuance you probably want to explain to people, and a lot of
definitely
different options to go over. I know I was going over them like a couple days ago myself, and I'm like, I don't know what to buy here. Like, it just feels like I'm just buying Bank of America debt in all of them, and I don't want to do that because Bank of America is not solvent.
It's okay. They're always bailed out.
Yeah, I guess that's probably what the market's thinking. Like, yeah, I know 5% for an insolvent company is not great, but they will get bailed out. So, free money?
Yeah.
I don't know. All right. Well, I had a great time today. A little different than the in-person. I miss being able to see your face, but
yeah, this is kind of weird for me, to be honest. I like being in the studio.
I like that the audience could see us and the charts at the same time, and then I got to put my little background up. I generated all of the artwork for the pod using AI to
Did you really?
Yeah.
It looks really cool, man.
Thank you. I was a designer in a past life, I guess. So I just gave it all these prompts about, I don't know, I got to find the prompts. They're pretty funny. I got some I wanted to put on my wall as art. It did like cash like raining from the sky, and it was like a pixelated city, and it was there were just cash blowing in the wind everywhere. I was like, I could put this up like behind me, maybe in the background. It'd be pretty cool. It was a little too distracting for the thumbnail art because there was too much going on. But yeah, it was good, man. AI is sweet.
Which one did you use for that?
I was using Canva. So can we trade Canva? That's a cool product, man. I've used that product for years. It's just like a web-based Photoshop that like holds your hand through everything. It's a super easy to use templates, so a complete novice can use it. I feel like they raised a huge round. Yeah, they have a free version. But now they've got AI integrated into all the stuff, and I hadn't used it for a while. Like I used to use it all the time back in, when I was doing e-com stuff and building websites and everything. Yeah, it's sweet now. Like if you want like a background or something, you just type in like what you're envisioning, and it will give you, like, it could be something simple like, oh, I want a white background rectangle to put behind the text, or you can give it like a crazy vision for artwork, and it does everything for you. It's awesome. It's awesome.
It looks like
super bullish AI. That's why I want to buy stocks so badly. I've been waiting for the time to go super unreasonably long, because I just still believe that like features like this are just, they're going to creep into everything that we use, and we're just going to unlock just crazy amounts of productivity. I think people are still not grasping the implications of like the AI revolution. Like, and we had our little kind of blow off for all year earlier in the year. Like we had it wasn't the mini bubble, but we kind of did, I think, like, you have like the first sell off, and people are like, in the first sell off, people are like, oh, that was a stupid bubble. But it's actually just the first sell off. Like you go up another like 10x after that, right? So I kind of have a vibe that's where we are, and I have been pretty bullish on S&P going to 55 or 6K for a while, and just been waiting for that entry. And I don't know, I probably should have bought some yesterday, to be honest. I should have bought like 10% or 20% or something, because sometimes it just goes without you, and the pain of sitting there watching it go without you is just like so unbearable. And oftentimes when you have the idea, you just gotta put some skin in the game. Otherwise, like you're met with just like such psychological pain. It's like almost like the market knows how to hurt you.
So it looks like Canva is preparing for an IPO. It's not public yet.
Oh, interesting.
Keep an eye out for that one.
Interesting. I don't know how IPOs have been doing lately. I'm guessing not great.
No, terrible. Terrible.
Yeah, Stripe is going to IPO, right?
They've been talking about it for years.
Yeah, I think it's coming soon, and the Stripe should be interesting, because that's going to be like the new multiple of record, I guess, for everything, because that's, I think, one of the better companies that's gone public in tech for a while. So yeah, be interesting to chart that one and see how it pans out. I don't really trade IPOs. It's kind of a complete shit show from what I see, but good luck to those of you who do. Anyway, yeah, thanks for joining us, everybody. We are hanging out in the Alfalfa Pod Discord and chatting markets all the time. You can find those links at alfalfapod.com. Give the video a like if you have not done so already, and feel free to subscribe to this channel. I think we are going to launch a separate channel for this show, so that we don't like mess the Alfalfa audience up too much when we just go full TA on everything. And then hopefully we're going to get on Spotify and Apple Pod pretty soon. I don't know how good this show will be, audio only, but I know some of you out there only like the audio only, and thus you probably aren't even listening to me say this because it's video. But yeah, we'll have all that for you. Having a great time doing this so far, and definitely excited to see what comes in the future episodes. Got any parting words for us, Eric?
I just think one thing at a time, man. One thing at a time. We can't even screen share yet. We got a lot to figure out before we start.
We've done a lot in 2 weeks from like absolutely nothing. It almost looks like we kind of know what we're doing. So
that's true, man. Good job.
Thank you. I'm basically a professional podcaster / production assistant at this point. Anyway, all right, bud.
Yeah,
well, you have a good rest of your day. Everybody out there, thanks for coming and saying hi. We will see you next week.